Hello again, this is Motionz Biz, and tonight I just wanted to make a continuation of my video about the 3001 pledge loan hack, because this is what I like about this community, because we are so interactive and you actually give me ideas on what to expound more, okay? And we have input from our subscribers who have been here for a long time and who are very familiar with the pledge loan. And it always gives me an idea on how to explain it better. So if you are, or there is somebody who is not familiar with the pledge loan and is a new member of Navy Federal,
it would provide a better understanding of how the pledge loan works. So when it is their turn to do the pledge loan, they know what to do and understand better how it works.
And in this video, I will also be using as an example an actual pledge loan by one of our subscribers at Seesaw. Thank you so much for sharing your information when you made a $10,000 pledge loan and you shared exactly how much you were paying a month and how much your interest rate was. So because it is $10,000, that is the reason why our subscriber was able to extend the pledge loan for 60 months. And that is also the reason why when you do a pledge loan of $3,001 and higher, you can extend the term of that pledge loan for up to 60 months. Before I continue, just let me share with you the very basics of how a pledge loan works. And I will use as an example one of our subscribers' explanation of how a pledge loan works, because this way, if it is your first time coming across information about the pledge loan with Navy Federal, this really gives you a better understanding of how it works. So here it is, and here is how he explained it.
Here's the basics of how the pledge loan works. You put $250 in your savings account. Navy Federal puts a hold of $250 on that account and then loans you $250 so you get your money back right away. Then each time you make a payment, for instance, of $25, they will knock off $25 off that hold, and a couple of days later you will see that money is brought back to your account. He's using $250 as it is easy to understand and it's very basic.
So now that we have talked about the basics of a pledge loan and how it works, I will share with you one of our subscribers' experience, an actual pledge loan that he did for $10,000. And let me share that with you right here, and why a longer term pledge loan also makes a lot more sense.
As shared by one of our community members, he decided to do a larger pledge loan. And the breakdown was the pledge loan was for 10,000. So he is paying $176.42 a month for 60 months at 2.25%. He will be paying a total of $585 total interest over the life of the loan. And as you can see, there is a fee for the pledge loan, but the benefit that you will get from a pledge loan is nothing compared to the fee that Navy Federal asks you for it. That's why they also really encourage the use of the pledge loan. And he shared a few more data points. He said that the money was originally in his personal checking account, and the bank rep actually moved the money into the savings account to start the application process.
Now, just to give a very brief summary of the terms for the pledge loan, okay? When you do a pledge loan of $250 up to $500, you can extend the term of that pledge loan. You pretty much have up to 6 months for that pledge loan. Once it hits 501, but less than 1,000, that will be good for 12 months. Now, once you hit $1,001 for your pledge loan, you can extend that pledge loan for a total of 24 months. And like in my previous video, when your pledge loan is $3,001 and higher, you can extend that pledge loan for up to 5 years or 60 months. Just to tackle the issue of why do long-term pledge loans make a lot more sense? If you are able to do it and you have the resources to do it, it would indeed be more beneficial. Because the thing is, if you want an installment loan, a bigger amount installment loan, that would report for a straight 60 months. And that is already paid off for about 70 to 90%. Then it makes more sense to have that reporting on a continuous basis compared to, let's say, when you have a $250 pledge loan, that is only good for 6 months of reporting. And then what you do next is that you will have to open maybe another pledge loan that may be good for another 6 months. And then now it kind of affects your credit age, okay? Because every time a loan is completed, it reports only up to that point and it will be considered a closed account on your credit profile. One of our subscribers actually explained that it makes more sense to have a loan that reports continuously for a total of 36 or 60 months versus doing multiple pledge loans of $250 that is only good for 6 months at a time. So it kind of makes more sense, and I hope you're getting that. If you do decide to do a larger amount pledge loan, just think that, and just imagine and think about this, that remember, when you do a higher amount pledge loan, it is not scary at all just because, let's say, you're doing a 3001 pledge loan. You want to pay 90% off of that pledge loan. That would be about $2,700. So that means you have $300 more left. Now, once you pay off the 90%, and it doesn't always have to be 90%, it's totally up to you how much money you want to get tied up and remaining on that pledge loan. Okay, it can be 70%, 80%, or 90%. Now, remember, you can do two things, okay? Number one, you can either divide the remaining amount, or let's just pretend it's about $300 for 60 months. Okay, you can divide that by 60 months and pay that, place that on auto pay all the way through 60 months. You can do that if you prefer that. Now, another thing to consider when you are doing a pledge loan, remember when you pay down a pledge loan anywhere from 70 to 80 to 90%, that amount goes back directly to your savings account that funded the pledge loan. So basically, it's like your money just revolves between your accounts, okay? So once you have done that, you only have the remaining balance on your pledge loan to really think about. That's the only amount that is tied up, okay? So if you want to pay 90% and get that 90% back into your savings account for other purposes, then you can do that, and very quickly. It is right there right away. It can be in a matter of hours or maybe a few days, but pretty much once you pay off that 90% or that portion, that will be back on your savings account. So that's why a lot of Navy Federal members really love the pledge loan, because basically you are lending yourself that amount. And you can also wait on the date that Navy Federal indicates on the app when your next payment, minimum payment is due. And that is usually closer to the end of the term. And you can do that. And the thing is, even if you will not be paying, let's say, from month 2 all the way up to month 58, that is still okay. Because remember, you paid that loan in advance. And Navy Federal will still be reporting on your credit every month on-time payments that you are paying the agreed amount for that installment loan. And you can just imagine the impact of that to your credit. Again, I hope that gave you another perspective of how you want to do your pledge loan and why longer terms might be more beneficial than shorter terms pledge loan if you prefer that and if you have the funds and the resources to do so. So again, this is Motionz Biz. I really appreciate your input because it keeps giving me ideas on what to tackle and discuss in this channel. And thank you so much for always following this channel. Until next time.